Trading can be an exciting and potentially profitable venture, but it is important to have a solid understanding of the markets and its mechanics before getting started. 1. Educate yourself. Start learning as much as you can about trading. Gain a basic understanding of the market and how it works. Learn about the markets, trading strategies, and risk management. 2. Choose a broker. Find a reputable Forex broker to help you execute trades. You can use the broker I trade with, link in the description. 3. Practice with a demo account. Most brokers offer a demo account where you can practice trading with virtual money. This is a great way to practice your trading strategies without risking real money. 4. Develop a trading plan. Before you start trading with real money, develop a trading plan that outlines your trading goals, risk tolerance, and strategies. 5. Start small. When you first start trading with real money, start with small amounts until you gain more experience and confidence. This will help you limit your losses and build your skills over time. 6. Stay disciplined. Successful Forex traders are disciplined and follow their trading plan consistently. Avoid making emotional trades based on fear or greed. Ultimately, whether you should start in the stock market or Forex market depends on your personal preference and trading goals. Both markets offer opportunities for profit, but they also come with their own unique risks and challenges. Day trading and swing trading are two popular styles of trading in the financial markets. Day traders and swing traders use different trading strategies, time frames, and risk management techniques to make profits. Day trading involves buying and selling securities within the same trading day. The goal is making profits from small price movements. Day traders typically use technical analysis to identify short-term trading opportunities and execute trades quickly. They may use leverage to increase their trading capital and take advantage of small price movements. Swing trading involves buying and holding securities for a few days to several weeks. The goal is profiting from larger price movements. Swing traders typically use technical and fundamental analysis to identify medium-term trading opportunities. They manage their risk using stop-loss orders. Both day trading and swing trading have their advantages and disadvantages. The choice between the two will depend on the trader's personal preferences, risk tolerance, and trading style. Day trading may be suitable for those who prefer fast-paced, high-risk trading. Swing trading may be more suitable for those who prefer a more relaxed and less risky trading approach. We hope this video helped to clear your doubts. Subscribe for more videos.